All right, guys, super cool. Welcome back to the channel. When I roll out these portfolio reviews, this is an example of one of the two affiliates programs that we're with, and this M1 Finance account is going to actually be twofold. It's going to be an M1 Finance portfolio review for me. We've just surpassed the $2,500 marker in there, so 25% toward our $10,000 goal in that account. I'm also using the M1 platform to provide a cross comparison between the Fidelity ETFs and the Vanguard ETFs. I took a little bit deeper dive. This will be aimed at my boy 𝗖𝐋𝐈𝖖𝐊 Investing as well, who offered a review on the same topic. And I think at the end of the day, the informed investor is going to be the end byproduct of this scrutiny on who holds the best specialty ETF or sector-specific ETF. So I'll offer that as part of this portfolio review. I also like to roll out these reviews to provide some transparency on what M1 Finance has to offer. It really is a crowd favorite across the investing landscape. Free investing, portfolio reinvestment, partial share investment opportunity for new investors. It's never been a more exciting time to get involved in the investing world, and M1 Finance makes it fun. It really does. It's a fun way to seek out exposure. I enjoy the platform. It's one of my smaller platforms. I started the account as a little bit more of an experiment. Not only that, but I wanted to provide some insights on what M1 Finance had to offer. Now, the Independent Investor channel is affiliated with M1 Finance. It's a great favor to the channel if you do end up clicking on the link in the description in this video and every video that I make, and look to research M1 Finance a little bit more in depth for yourself. Please understand that the channel can receive a small compensation to help support messages like this for investors looking to seek out exposure to the market and do so free of charge. M1 Finance really checks a lot of boxes for new investors. So with that said, guys, this is a little longer video than normal. Please sit back, be patient with it, and I think you're going to find a lot of value in the deep dive that I did on the ETF comparison with Vanguard. So with that, I will kick you into M1 Finance now, and we'll start the review. All right, super cool. So I want to welcome everybody into the M1 Finance account. This really is an underground community investor favorite platform for a lot of investors, new investors, seasoned investors like myself. In a nutshell, M1 Finance really makes investing fun. It really does. Very clean, aesthetic layout on their platform. I really like how they've laid this out. It's really unlike any other broker that offers full service to their customers. Now, there are a few things about M1 Finance that are really unique to the platform. The first being portfolio reinvestment. So the way I've got this portfolio laid out, I've got my exposure to all the S&P 500 sectors. I've got the sectors broken down into the 11 specific sectors, and I use Vanguard's Sector Spider ETFs to seek my exposure. The cool thing about it is if any of these 11 ETFs pay the dividend, it does not go into the underlying asset. It actually pays into the portfolio, and it goes to fund the lowest percent of allocation in the portfolio. So for example, if technology pays a dividend, it's actually going to roll back into the lowest allocation or the underweight holdings. So in this example, it could partially go into energy, it could partially go into utilities, and that makes it extremely unique in nature. The second thing that I'll mention that gets a lot of people fired up about M1 Finance is the partial shares that you can purchase on higher cost equities. And this is a really big plus for a lot of people who don't want to spend close to $2,000 on a share of Amazon or close to $1,300 for a share of Google, you can actually invest $100 in those higher priced stocks, and that really sets M1 Finance apart from the rest. I know there's some discussion on the street about other brokers picking up on that partial share opportunity for investors, but up until now, M1 Finance, to my knowledge, is the only one that allows that type of activity and service to investors, and it really opens the door of opportunity for investors that want to get exposure to those great growth companies, but don't have the $2,000 to enter into one single share of it. They can buy the partial share and dollar cost average it up until they've achieved that one share level. So really cool, dropping barriers to entry for all new investors. M1 Finance does offer taxable brokerage accounts and also retirement accounts. So really separates themselves from a platform like a Robinhood that still doesn't offer retirement accounts. I think that's a huge drawback to platforms like Robinhood when they're trying to compete head-to-head with a platform like M1 Finance. M1 Finance is an affiliate with the Independent Investor channel. We do roll this out as one of the two brokers that we would like to see potential investors take a harder look at. The description will be provided in the link to this video and all other videos that I post to YouTube. Please understand that if you do kick over there and check out the platform with a little bit more scrutiny, I could receive a small compensation that helps us support the message and helps me put out more content like the one that you're viewing now. So I thank you in advance for that. Now that we've got that disclosure out of the way, we can jump into this. I was able to do something very special for this video. I was able to take and make a cross comparison between the Vanguard's S&P 500 sector spider ETFs and Fidelity's sector spider ETFs. And I did that in a number of different ways. This portfolio, as you can see, is custom allocated the way that I want. So for example, I have this weighted to have technology right at the top because I want it to be a little bit more aggressive in nature. And then I want the portfolio laid out in a manner that has my order of precedence in the portfolio from the technology down to the bottom where I've got materials. It doesn't mean that materials is a bad sector to invest in. It just means that I want it weighted with a little less emphasis in the portfolio than technology. Very, very simple. And I thought it was really cool. This portfolio has done quite well for me. I started it in March of 2019, so going on about 9 months of inception. So March of 2020 will be the 1-year anniversary of this account. We are over 25% toward our goal of $10,000. I've got two accounts simultaneously working toward that $10,000 goal, which is exciting. It's aimed at breaking down barriers for new investors to prove how quickly you can get up to that $10,000 mark, so just over 25% toward that goal. Capital appreciation in here is $179.22. Earned dividends is $26.91, with a total return this year so far of 12.38%, so not too shabby. I'm pretty satisfied with the performance of this portfolio. And it was interesting. I was introduced to a cross comparison of Fidelity Spider ETFs and to the Vanguard's offering of Spider ETFs. And I think on the surface, there's a few things that jump out at it. But the more deeper I got into this cross comparison, the more I was able to really determine that these two great companies are offering cutting edge sector specific exposure for investors. But what I'm going to do is I'm going to roll out some of the summary on what I've found out through this cross comparison between Vanguard and Fidelity, guys. So when I was comparing these two, I actually used M1 Finance to build out a replica portfolio of this portfolio that you see here with the exact same target allocation that I have. That was able to allow me to collectively compare the 11 sectors to the 11 sectors and really cross compare each brokerages if all other things were the same. So that really helped me take a good look at the strengths and the weaknesses of either one of the companies. And there was quite a list of positives, and there was a few negatives I actually found on each of the companies when I was doing this deep dive in the portfolio. So what I'm going to do is I'm going to jump into the Fidelity's version of this, and we'll just take kind of a quick look on the performance of each of these. So we jumped into the Fidelity sector portfolio that I built to replicate my exact target allocation. So you'll see here the funds. I'll be able to share every one of these pies with you guys, and this cross comparison would really not be as possible without the technology in M1 Finance. So we can share the pie, and we can take a look at these holdings. I found Fidelity to be very attractive with regard to their 5-year performance. This actually beat out Vanguard over the 5-year period. Fidelity performed at a 46.03% clip, and the 5-year for Vanguard is right behind it at 44.15%. Now that's not annual, that's over the course of a 5-year period, so you'd have to divide the difference between 5 years to get your annual anemic outpacing of Fidelity over the long term. And I thought, okay, well, if we're comparing the entire portfolio to the entire portfolio, let's look a little bit deeper in what we've got. Obviously, the expense ratio here in Fidelity is a little bit less, whereas in Vanguard, the expense was a little bit more expensive. So on the surface, it really appeared as if Fidelity really took the cake. There was a little bit of a difference in the dividend yield. If you looked at the dividend yield for Fidelity at 2.007, Vanguard was a little bit ahead of it, but not by much, at 2.046 on the yield. So I think the longer that you held the shares, Vanguard would win out a little bit when you're talking about the total overall portfolio yield. Now that was on the surface, and it was amazing what I found when I took a lot deeper dive into each one of these sector ETF offerings from either Vanguard or Fidelity respectively. So I jumped in here and started making a cross comparison of each of these sector ETFs from Fidelity and Vanguard respectively. What we're looking at here is a comparison between the Fidelity's technology ETF and I'll jump into the Vanguard's ETF because I thought, you know, if the portfolio appeared as if Fidelity really took the cake as far as the lesser of the expense ratio, and the performance was a little bit better from a portfolio perspective, what gives? And so I actually jumped in and did a cross comparison of each of these sector spider ETFs, and the information was really, really telling. So this is really the start of the rabbit hole that I ran down when I started to do a 5-year comparison of actual performance. You can see here in the technology that Vanguard outperformed the Fidelity account by a few points, okay, and it really got me on this this trip of cross comparing these apples to apples, so I could really understand, you know, what gives. The technology ETF on the Fidelity side yielded 1.02%, and you can see here that the Vanguard
had a higher yield at 1.25%, which was almost 0.25% difference on the Vanguard side. So not only did it yield a little bit better, but it also performed a little bit better than the Fidelities over the same 5-year period. Now, interestingly enough, this expense ratio is factored into this outperformance. So even though the expense ratio in the Vanguard account was a little bit higher than the Fidelity, it didn't matter when it came to the overall performance of the fund specifically. Now, the irony in that is that the dividend yield that's actually higher than Fidelity as well is not included in this appreciation. So when compared head to head, the Vanguard Technology Fund really took the cake. Now, this is not indicative of the way the rest of the review went for the rest of the sectors. As a matter of fact, you had to compare head to head each and every sector ETF on a direct basis. And what I was able to find was actually amazing. So some of the things that I talked about when I got into these funds directly that really, from a surface perspective, may have encouraged an investor to act one way and not the other without looking at multiple things. And this was one of them, was the dividend yield in this. This is the Fidelity's real estate sector spider ETF. The performance over 5 years was 12.62%. But anybody who looked at this, I actually initially had this in the category of having this be better with Fidelity, just because of this dividend yield here. 4.2% is pretty darn impressive. And when you look up at this 12.62, this appears as if it's a very good fund. But I want to jump in and do a head-to-head cross comparison with Vanguard now. So here's the Vanguard's real estate ETF, and upon initial look at this, I want you to note that the expense is even higher. This is the highest expense that Vanguard offers in all the 11 sectors. But I want you to pay particular attention. This expense ratio is actually figured into this 5-year performance. And so even though the expense is significantly less with Fidelity, the fund actually performed significantly better with Vanguard at 14.51%, whereas the Fidelity fund returned 12.62% over the previous 5-year period. Now, interestingly enough, in both cases, the dividend yield would not be factored into this figure. So in all fairness to Fidelity, that Fidelity dividend yield that was significantly better would have played a factor in this and would have got this closer to this performance over the same period in 5 years. So this less dividend yield, that was a jarring difference. If you were looking at getting a little bit more dividend yield, I would go with Fidelity. But when you're talking about actual performance in dollars, Vanguard actually took it in that category. But those were the head-to-head specifics that I was looking at when I was making this cross comparison between the two. I'll continue on to the next fund. So this is the telecommunications sector with Fidelity, and this is one of those just glaring differences that I found, and I could not explain why it was. But this fund is actually very, very impressive from Fidelity, 32.26, with a very light expense ratio on this and a 1.268 dividend to boot. I did have this with Vanguard. The dividend yield was only 0.81 with Vanguard. So all the way around, this is one glaring example where I thought the technology sector really took the cake with Vanguard. This is the flip side of the coin, where I actually thought this Fidelity Communications sector ETF really killed Vanguard. And I want to show you what I looked at when I cross-compared these two. So here's the Vanguard's telecommunication, and this is a real dog. Look at this. This was the most significant gap in outperformance of any of the 11 sectors that I compared head to head. There really wasn't any comparison at all. This is an anemic 6.78 when compared to the Fidelity's 32.26. And I don't know if I was missing something behind the scenes. I don't know if this had something to do with the recently created telecommunications sector, and through that re-racking of this sector specifically here recently within the last 5 years had anything to do with this. But the numbers don't lie. And as far as I'm concerned, to accept this anemic dividend and paying this higher than average expense ratio for this lack of performance is really, I'd really give the nod here to Fidelity when we're talking about the telecommunications comparison head to head. Just one more of the couple alibis that I found when I was doing this cross comparison between Fidelity and Vanguard. This caveat right here kept coming up in that in the prospectus, it talked about the Fidelity managers only being on the hook to invest at minimum 80% of the assets in the underlying index that they were looking to mirror. And this was an interesting little red flag for me. And it would actually encourage me not to invest in the fund. And here's why. It gave way too much free rein in this portfolio to just put 80% as disclosed to the investor into this asset, and gave way too much freedom to take those dollars and invest them elsewhere. And I really thought that was a negative of all the Vanguard funds. All 11 of them have this exact same explanation as to how they're investing their money. And case in point, when I started to compare the actual holdings within each of these sector SPDR ETFs, Vanguard had significantly more holdings in each of 8 out of 11 of the sectors that I compared. The remaining 3 were dead even. So there was not one Fidelity sector SPDR ETF that actually held more holdings when compared apples to Vanguard. And I thought that was interesting. The total number came out to be 2,451 companies for Vanguard, as opposed to the 2,420 for Fidelity. So 31 total companies more when we're comparing the total portfolio to the total portfolio of actual stocks being invested in. And I thought that was a really interesting takeaway from comparing these two prospectus. And it gave a little bit of insight on how the money managers behind the scene were only needing to comply with this 80% of the assets in securities included in the fund's underlying index. Now, the Vanguards read significantly different, and it felt like there was a lot tighter of a rein within the Vanguard accounts for what the money managers could and could not do with the monies that flowed into that fund. And this is just the comparison. This is actually a standard across all the 11 sector explanations in the profile of the fund for Vanguard. And I really liked this. I was trying to be very impartial when I was reading through and doing this comparison. But the advisor attempts to track the index by investing all or substantially all of its assets, either directly or indirectly through a wholly owned subsidiary, which is itself a registered investment company, in the stocks that make up the index. I thought that was really telling in comparison to Fidelity, that only gave an 80% requirement minimum to be invested in the fund. I would have liked to have understood what the money manager was allowed to do with that remaining 20% of the funds when it wasn't bound to be invested like it was with Vanguard. And I just, in closing, when I was doing this head-to-head closing, I was able to determine which stocks or which ETFs would be the best with each company. And in my deep dive, I was able to determine that Vanguard had 5, and Fidelity had 5. That when compared, either a higher dividend or performance over the previous 5 years, which was fair for Fidelity because Fidelity were all incepted in October 20th of 2013. So I felt it was a really fair criteria to compare the two brokers, Vanguard and Fidelity. But with Vanguard, there were 5 ETFs that I felt were better: technology, healthcare, utilities, real estate, and financials. And with Fidelity, there were also 5. So it was a dead tie between the two: staples, telecommunications, discretionary, industrials, and materials. Now, the tiebreaker just so happened to be energy. And the ironic part about the energy is it was the only sector that over the last 5 years had a negative return, and it was significant losses over the last 5 years. And the tiebreaker goes to Fidelity. And it goes to Fidelity by a margin that is so skinny that you can't even believe it. Vanguard's energy ETF lost 29.08%, and Fidelity's lost a fraction less than that at 28.79%. So the edge goes to Fidelity for losing less than a quarter of a percentage point in its energy ETF. I think when you sit back and look at the cross comparison between these two fine brokers, I really think you need to look a lot deeper into deeper underneath the surface and really look at these funds, because the best I was able to tell is that 5 of the funds I would give the nod to Vanguard, and 5 of the funds I would give the nod to Fidelity. So, guys, I really hope you enjoyed this M1 portfolio review and cross comparison between the Vanguard Sector Spider ETFs and the Fidelity Sector Spider ETFs. This ought to generate some conversation. With that said, I'm going to kick you back to YouTube. Thank you so much.
All right, super cool. So we've come out of the M1 Finance platform after a great opportunity. This cross comparison of different products. I've used M1 Finance in this capacity many times before, and I find it to be a really useful tool in M1 Finance, one of many useful tools, and hopefully you got some value out of this cross comparison. I think when you're talking about Fidelity and Vanguard, you're talking about 2 of the most reputable brokers in the industry, and the deliberation really does split hairs when you're making your investment decisions to understand what are the pros and cons of each of the different brokers. And I hope this deliberation maybe helped you understand my rationalization for why I opt for Vanguard, and maybe if I had it to do over again, maybe I would have entertained a little bit more on the Fidelity side of the house, as we were able to determine that in a head-to-head comparison they were fairly equal, but I think there were some clear winners when we were talking about certain sectors on the Vanguard side and specific sectors on the Fidelity side. So if it's your first time to the message, guys, you want to hit the subscribe button. We're building a community of self-directed investors empowering their lives. This is super important, guys. I offer this channel as a testimonial to help those individuals who are looking to streamline the approach to investing, eliminate mistakes, and get off on your investing road in the correct manner. You want to hit the notification bell, be notified of future videos that I put on YouTube. Leave your comments in the comment section. And share this video with anybody out there that you know, maybe looking to get started earlier on in their life. Get them off on the right foot, bring them into the community. All is welcome to really get that empowerment started for new investors. Guys, thank you so much for tuning into the video, and good luck in your investment future.